Well, good morning, everyone. There seems to be a slight retracement in progress in equities around the world uh, as some hawkish news dominate. And clearly, we're going to see the extent of that hawkish news later on this morning when the Bank of England makes its mind about raising interest rates. I would expect that they'll go for a quarter point, but there are outliers who are saying half a point. So a big morning for the UK market in the light of pretty ghastly inflation numbers that came out earlier in the week. So let's just have a quick look at the UK. And what I'm looking at in the first chart is the UK market timing. And that's a chart of the VectorVest composite UK over the last year. And as you can see, it's gone pretty much nowhere. It's stuck in a range. That range has got tighter over the last 3 or 4 months. And as we go into the trading day today, the short-term trend on the UK market is down. The underlying trend has just turned down, but the longest term measure of the trend on VectorVest, the confirmed call, is still up. So we have a mixed situation, and VectorVest does not believe that you should be buying stocks today. And that goes for both sides of the Atlantic. So over the last few months, we've had very, very difficult trading conditions, that's for sure. Can't remember them being tighter or worse. The American market moved up more strongly, led by what they call across there the Magnificent Seven, the IT stocks, and still hasn't broken out of that range and seems to be coming back a tad. The short-term trend is down, but the underlying and the longest term measure of the trend still up on the US market. That's the American market, that sector of the American market that's done the best, which is the NASDAQ 100. And as you can see, it has come off pretty much exactly a 78% retracement of the sell-off that occurred from November 2021 to last October. So that's a very important level in markets indeed. I think it needs to get through that. But I think we'll probably have a pullback, a natural pullback first before it starts again. So my strategy in both countries is that I've got myself up in this rally in bear markets to about 60% invested. I'm not going to do anything more until this little bit of a pullback, if it is a pullback, is over. Let it find a bit of solid ground again and wait for it to turn, and then I will add and hopefully get back to being fully invested. So that's Jet2. That's a share that I've got. It's been very kind to me. I bought into it after the flag-like pattern way back in December, January this year. It broke out of that flag and moved out strongly, went sideways. As you can see, the stock is undervalued. That's the green line above the price, and earnings per share is growing strongly. In terms of industry groups around the world, airline travel is one of those industry groups that is performing. I think that stock looks as if it wants to go much higher when the general market rights itself. I bought into it last January. I added to the position once, and I like the way that it came down with this undercut and it started to move back up again. That's what I teach at some of the swing trading courses. It's called a Wyckoff spring. So that looks particularly exciting to me in Jet2. 4 is a very similar situation. It's one of my biggest positions. I bought into it again last November after that bull flag, and in this case it actually gapped out of the bull flag, which is really first prize, and it then pulled back, ran a heap of stops under these lows, and it has now pushed up. It got through the 50 level the other day. I think it pulled back below 50 yesterday as the general market pulled back. But that looks very strong. And as I say, I personally have a significant position in that, which I've added to twice. Now, this is a new stock that I haven't talked about before. It's called the Bank of Georgia. And I wrote about it in my blog on the VectorVest.co.uk website last weekend. As you can see, it's undervalued. That's that valuation's the green line above the price. Earnings per share is growing strongly, fairly linearly. As you can see, the share has pulled back to the last previous top, where previous resistance has now become support. I haven't got volume on there, but if you examine the volume, you'll see that it pulled back on falling volume. And over the last couple of days, it's found strong support at the previous resistance level. And it's moved up on reasonable volume. So I think that that looks like a good entry point into the Bank of Georgia. And this is a stock that I spoke about last time, Alpha Financial Markets. Slowly but surely, just about, I think, to break out of that ascending triangle. It's on a buy recommendation on VectorVest already. Earnings per share is growing strongly. Those of you that are breakout traders, then you would want to close above the horizontal line defining the ascending triangle. That's all I've got for you this morning. Last week, I had Games Workshop as well. And Games Workshop moved from, what, £98 to, I think it was off a bit yesterday with the general market, but I think it went to £107. So it was up the guts of 10% in the week. I'm hesitant to speak about it this week. I still think going forward, it looks like a great opportunity, but it looks a little bit overbought in the short term. So if you want to find these stocks for yourself, then easiest way is to go to VectorVest and go to VectorVest.co.uk, take a 30-day trial. Now, that 30-day trial is going to break the bank. It's a full 99 pence at the moment. That'll give you a full access to VectorVest World, not just the UK, the US, Canada, Australia, and the whole of Europe, and of course the UK. And you've got 30 full days to see whether it's for you or not. Thanks very much indeed.